I'm working in First Financial because I was excited when I heard the commitment to excellence the organization has. My involvement with the organization, with the employees, teaching the employees was particularly exciting because I was able to give people in the service industry means to accomplish success. And I made up my mind and commitment to impact people positively and help them, people who seek excellence, who are sincere about seeking excellence. If I'm successful in helping to teach service excellence to the organization, if we're successful as an organization to accomplish a higher level of service success, then we have aligned every employee and make every employee feel part of the organization more than before. And every employee understands the objective of the organization, and every employee understands what it takes. What are the steps? In fact, we have developed 21 steps. If we live up to this in excellence with these 21 steps, we will be superior to any competition. And if you walk into a bank, you will feel it and sense it from every employee. In fact, if you walk into any branch, you must feel the same thing. Total excellence, total alignment to the objective of the organization, which on the end will be of great value to all concerned, to the investor, to the customer, to every employee, and to society as a whole, every community. That's the intent, and if you walk into a bank, you will feel that. I owe you to help you to grow and be more excellent. If you come to work to just paint the wall, or do you come to work to create a masterpiece?
Ladies and gentlemen, that is Mr. Horst Schulze, who is the co-founder of Ritz-Carlton and the Capella hotel chains, and is one of the top customer service people in the world. We are delighted that he is our consultant for customer service here at First Financial Bankshares. This video gives you a little taste in what's to come on how we will continue to perfect our customer service to differentiate us from any other bank in the country. You'll learn more about Horst and get to know him at today's luncheon. Welcome to the annual meeting of First Financial Bankshares. I'm Scott Deeser, and as chairman of the board of directors, it is my pleasure to proceed at today's meeting. Today marks the 46th annual meeting of shareholders since this company was organized as a multi-bank holding company in 1973. As always, we are honored to have so many of our stockholders here today. Your interest and dedication to our company is very gratifying to us. Your continued support is very much appreciated. I hope you like the change in the meeting venue from the auditorium to the conference center. This room is much more accessible and puts you up close so that you can see the slides and hear the presentations. And frankly, we hope it's a lot more personal. We have a great story to tell, and we don't want you to miss any part of it. At the luncheon will be held in the exhibit hall, which is right down the hall. We hope this venue works, but if it doesn't, we'll go back to the auditorium. As set out in the proxy statement dated March 1st, 2019, our directors, Tucker S. Bridwell and David Copeland, are serving as our proxies and are authorized to vote in accordance with your proxy, which was completed and returned by mail, computer, or in person. Otherwise, proxies received prior to the meeting will be voted in accordance with instructions contained in the proxy statement. If you have revoked your proxy prior to the meeting, or if you voted today at this meeting, please mark your proxy, raise your hand, and we will collect your proxy cards at this time to submit them to Mr. Copeland and Mr. Bridwell to tabulate these votes with the proxies previously received. Anybody have their proxy here? Good. That's what we like to see, that everybody's done theirs before. Makes it a lot easier. Thank you. While Mr. Copeland and Mr. Bridwell tabulate the number of shares represented either in person or by proxy, I'd like to introduce our senior management, who truly are those who lead this company. I would ask each one of them to stand and remain standing to be recognized as a group. I'd ask for you to pay particular attention to their experience level as each one of these professionals as we go through their names. Scott Deeser, Chairman of the Board, President and Chief Executive Officer. Ron Butler, Executive Vice President and Chief Administrative Officer, and also the CEO of our Abilene region. Tim Collard, Executive Vice President, Lending. Troy Four, President, First Financial Mortgage. Gary Gregg, Executive Vice President, Chief Lending Officer. Bruce Hildebrand, CPA, Executive Vice President, Chief Financial Officer. Monica Houston, Executive Vice President, Retail Banking and Training. Luke Longhofer, Executive Vice President, Chief Credit Officer. Randy Rowe, Executive Vice President and Chief Risk Officer. John Ruzicka, Executive Vice President and Chief Information Officer. Michelle Stevens, Executive Vice President, Advertising and Marketing. Kirk Thaxton, Chairman, President, and CEO of First Financial Trust and Asset Management Company. Marnie Yergin, Executive Vice President, Lending. Brandon Harris, Senior Vice President, Appraisal Services. Larry Kentz, Senior Vice President, Compliance Officer. Kyle McVeigh, Senior Vice President, Chief Accounting Officer. Brandon Barker, Co-Manager of First Financial Investment Advisors. Will Christofferson, Vice President, Advertising and Marketing. Frank Joya, Senior Vice President, Customer Care Center. Tony Gorman, Senior Vice President, Human Resources. Rick Howard, Co-Manager of First Financial Investment Advisors. Gary Millard, Vice President, Property Management. Andrea Smitty Slagle, Executive Vice President, Treasury Management. Mike Wolverton, Executive Vice President of Consumer Lending. And now our presidents. Marilyn Shedd, President of our Abilene region. David Bailey, President of our Eastland Division. Joseph Crouch, President of our Sweetwater Division. Mike Malden, Chairman, President, and CEO, Hereford Region. Chris Evett, Chairman, President, and CEO of our San Angelo Region. Austin Elsner, Chairman, President, CEO of our Cleburne Region. Trent Swearingen, Chairman, President, and CEO of our Stephenville Region. Justin Hooper, Chairman, President, and CEO of our Weatherford Region. Mark Jones, Chairman, President, and CEO of our Southlake Region. Stephen Lee, President, CEO of our Southeast Texas Region. Sam Baker, Chairman, President, and CEO of our Conroe Region. Kirby Kaysen, President of our Huntsville Division. Marcus Morris, Chairman, President, and CEO of our Fort Worth Division. Johnny Brooks, Chairman and CEO of our Kingwood Region. And Shelley Dacus, President of our Kingwood Region. Ladies and gentlemen, this is your management team who make this bank one of the top banks in the country. And I hope I didn't forget anybody. Mark Jones, I didn't forget you this year. I've told him that's a Freudian slip, that I've forgotten him several years in a row. Each of our bank regions, as well as our trust and technology companies, are guided by very capable boards. Altogether, we have over 130 business and professional leaders other than bank presidents and company representatives who serve our 11 regions and our trust and technology companies. As we say, our boards are the movers and shakers of the communities that we serve. Their guidance and counsel is greatly appreciated, and their influence in the markets we serve is vital to the ongoing success of an organization. Numerous board members are in attendance this morning, and I respectfully request that those in attendance please stand and be recognized. Would all our board members please stand? And I can't tell you how much we appreciate them. For the past 16 fiscal years, the accounting firm Ernst & Young LLP has performed the audit of our company. We appreciate their professionalism, and we are pleased to have representatives from the firm with us this morning. Mark Bell, Matt Whip, partners with the firm, and Jeff Coons, senior manager with the firm, are here today. Would you gentlemen stand? Okay. Any questions that you have, we're going to direct that direction. They've already been here and had an audit meeting this morning, so they've been well versed on the numbers. It appears that the shares represented today have been accounted for. Therefore, we will move along with today's official business. In accordance with the annual meeting notice and the proxy materials that were mailed to all shareholders, there are 4 items that require the official vote of shareholders. These were covered in detail in the proxy materials. However, as we present these items, if any of you should have questions, please raise your hand or stand and we will respond. Mr. Copeland and Mr. Bridwell, have you tabulated the votes? We have. Okay, there y'all are. Great. Now I know where y'all are. Good. Mr. Copeland, will you please give us the number of shares that are represented by proxy and the number of shares in person?
Total shares voted are 60,742,724 shares, which represents 89.6% of outstanding shares.
That's great. That is great. We appreciate everybody voting. Let me tell you, this year we had a little angst because we had some people that didn't vote, 2, didn't vote early. And so I will tell you, I'll just remind you, when you get that proxy card, vote it and vote it early. The sooner we get the votes in, because it could have affected the turnout of today's business if you had not voted. So just remember, it's important, very important. Okay, the number of shares represented constitutes a quorum. Therefore, this meeting is properly and duly convened. That being the case, it is our standard procedure not to read the minutes of last year's meeting. Mr. Bruce Hildebrand has them in hand, which was for the meeting which was held on April 24th, 2018. That meeting had 4 official items of business, those being the election of directors, the ratification of appointment of independent auditors, the advisory vote on the compensation of our named executives, the advisory vote on frequency of the advisory vote on executive compensation. All 4 items were approved by the shareholders. As set out in the proxy statement dated March 1st, 2019, we have 4 official items of business for this meeting. Our first item is the election of directors to serve on the corporate board for the coming year. As stated in the meeting notice and the proxy statement, the Nominating Corporate Governance Committee and the Board of Directors have recommended 12 directors be elected, 10 of whom are currently serving as your Board of Directors and 2 new nominees for election to the Board of Directors. I'd ask that each nominee stand and remain standing as each are introduced. The nominees and their primary business are as follows. April Anthony of Dallas, CEO of Encompass Home Health and Hospice, and Home Care Home Base. Tucker S. Bridwell of Abilene, President of Mansfield Investment Corporation. David Copeland, CPA of Abilene, President of SIPCO, Inc., and the Shelton Family Foundation. Mike Denny of Abilene, owner, President of Bacher & Associates, Inc. F. Scott Deeser, Chairman of the Board, President and Chief Executive Officer of First Financial Bankshares. Murray Edwards of Clyde, Principal of the Edwards Group. Ron Gideons of San Angelo, owner of C&G Investments and former President, Bank of the West in San Angelo. Tim Lancaster, now of Lubbock, retired President and CEO of Hendrick Health System. Cade Matthews of Amarillo, Ranching and Investments. Robert Nichols Jr. of Kingwood, Executive Chairman of a Legacy Group, LLC. Ross H. Smith Jr. of Orange, Chairman and President, Acrotex, Inc. And Johnny E. Trotter, President and CEO of Livestock Investors Limited. This is your recommended slate of directors for the coming year. Mr. Copeland, please give us the tabulation of the votes.
Scott, no director received less than 98.6% of the shares voted.
That's great. Thank you, Mr. Copeland. And these votes, all 12 directors are duly elected. The second item of business is to ratify the Audit Committee of the Board of Directors' appointment of Ernst & Young, LLP as independent auditors for the fiscal year ending December 31st, 2019. As noted in the meeting notice and the proxy statement, the Board of Directors has recommended the appointment of Ernst & Young, LLP be ratified. Mr. Copeland, the totals in this regard.
The shares voted for ratification, 98.4%.
Very good. That's a majority, and the appointment is ratified. The third item of business is the advisory vote on compensation of our named executive officers. Pursuant to the Securities Exchange Commission rules, we're again conducting a shareholder advisory vote referred to Say on Pay to give shareholders the opportunity to express their views on compensation of our named executive officers and the executive compensation philosophy, policies, and programs described in the proxy statement. As noted in the meeting notice and the proxy statement, the Board of Directors recommends approval of the resolution approving the compensation of the named executive officers. Mr. Copeland, the total is in this regard.
Those voting for the approval totaled 96.8% of shares voted.
That's a majority, and the advisory resolution is approved. The fourth and last item of business is the approval of an amendment to the amended and restated certificate of formation to increase the number of authorized common shares to 200 million. As noted in the meeting notice and the proxy statement, the Board of Directors recommends approval of this amendment to the amended and restated certificate of formation. Mr. Copeland, the totals in this regard.
Shares voting for the amendment totaled 98.2% of shares voted.
Thank you. That's a majority, and the advisory resolution is approved. This concludes the official business, and we appreciate the strong approval of the four Board of Directors' recommended items this morning. Bruce Hildebrand will now present the financial results, and Kirk Thaxton will discuss trust highlights and activities. Then it will be my pleasure to present the 2018 and current activities of the company. Bruce?
Thank you, Scott. I'm very pleased to be with you again this year and to present the financial results for 2018 and the first quarter of 2019. 2018 was indeed another successful year for First Financial, our 32nd year of increased earnings. First, we'll take a look at net income. Net income of $150.6 million compared to $120.4 million for 2017, a 25.1% increase. Contributing to this large percentage increase is the cut in income tax rate from 35% to 21% from the Tax Cut and Jobs Act signed by the President in December 2017. Additionally, our Kingwood acquisition that was effective January 1st, 2018 was also a strong contributor to our increased earnings, generating $6.1 million after tax to our net income. Our growth in average earning assets of over $571 million or 8.7% resulted in an increase in net interest income of $36.1 million or 15.2%. This growth came from both our Kingwood acquisition and from growth internally. Trust fee income was again outstanding in 2018, increasing $4.5 million or 18.9% over 2017. Kirk Thaxton will address trust comments further following my presentation. Service charges on deposits grew $2.2 million, and ATM interchange and credit card fees increased $2.8 million, also contributing to our increase in net income. Basic earnings per share was $2.23 per share compared to $1.82 in 2017, reflecting a similar increase that I discussed above. Efficiency ratio is a performance indicator that represents the ratio of non-interest expense to total revenue less interest expense and is viewed as a key measure to determine whether we are effectively managing non-interest expense. In simple terms, this ratio reflects how many cents of overhead does it take us to make a dollar. The lower the ratio, the better. In 2018, our ratio was 49.72, virtually unchanged from 49.26 in 2017, but was impacted from transaction and conversion costs related to our Kingwood acquisition. Our efficiency ratio compares us very favorably to our Federal Reserve Bank peer group of 60.51%. This peer group from the Federal Reserve consists of 154 bank holding companies throughout the United States that have assets between $3 and $10 billion, and our ratio puts us in the 90th percentile. In 2018, our net interest margin was again under strong pressure as interest rates have continued at very low levels since 2007. Although we did see in 2018 a 100 basis points increase in 2018 and 75 basis points increase in 2017. The latest guidance from the Federal Reserve is that they do not expect further increases in 2019. Our net interest margin was 3.96% for 2018 compared to 4.01% for 2017, which puts us in the 75th percentile of our peer group. We have a substantial part of our assets in tax-exempt municipal bonds, and the decrease in income tax rates to 21% affected our net interest margin negatively in 2018. We work very hard each day to maximize the investment of our liquid assets, grow loans, increase our loan rates where appropriate, although we've not been as successful as we would like to be in raising loan rates in tandem with the Federal Reserve increases. This is due to the very competitive environment that we find ourselves in. Return on average assets is another key measure of financial performance for the banking industry. This is net income as a percentage of average assets, which was 1.98% for 2018. Again, this compares extremely well to our peer group of 1.22% and places us in the 96th percentile of our peer group. Another important measure is for shareholders is return on equity, which is net income as a percentage of average shareholders' equity. 15.37% for 2018 and 87th percentile of our peer group. Our return on tangible equity which excludes goodwill and other intangible assets, was 18.65 for 2018, which is also very strong. These ratios are especially strong when you consider our high levels of capital shown on the next slide. The four primary ratios that our regulators follow are shown here. As you can see, our ratios are at least double required to meet the minimum requirements of Basel III, which is our requirements. Our total shareholders' equity at March 31, 2019 was $1.11 billion, and our tangible capital was $933 million. From a balance sheet perspective, we had total assets at the end of the year of $7.73 billion. Our growth in 2018 was $477.1 million, with $356 million of that coming from our Kingwood acquisition. The Abilene region at $88 million and the Fort Worth region at $60 million were the largest contributor for internal growth. Loans totaled $3.97 billion at the end of 2018 compared to $3.5 billion at the end of 2017, an increase of 13.6% over the prior year. $318 million of this growth came from our Kingwood acquisition. We stood at a 64.3% loan-to-deposit ratio at the end of the year, and while we want to increase loans, we will not sacrifice credit quality for the sake of loan growth. Credit quality, as you can see here, our non-performing assets totaled $29.6 million as a percentage of loans, and foreclosed assets stood at 75 basis points at December 31, 2018. Our allowance for loan loss was $51.2 million, or 1.29% of loans. Our total deposits increased to $6.18 billion, up $217.43 million, or 3.6% over 2017. Our non-interest demand deposits remain strong at $2.12 billion, 34.2% of our deposits, and obviously have a very positive effect on our net interest margin and our profitability. Now let me cover some highlights of our first quarter numbers that were released last Thursday, April the 18th. Net earnings of $38.3 million compared to $34.5 million for the prior year, a solid 10.81% increase to start the new year. Contributing to our first quarter net income growth was an increase in net interest income from the growth in earning assets of $103.72 million compared to the 2018 first quarter. Our interest expense did increase $3.75 million over 2018 due to the federal fund rate increases in 2018 that I discussed earlier. Our service charge income on deposits increased $292,000, and our real estate mortgage fees increased $541,000, both contributing nicely to our increase in net income. We did record a $900,000 expense in the first quarter of 2019 related to our continued efforts to terminate our defined benefit pension plan. We hope to have this termination wrapped up by the end of this year or the first quarter of 2020, which will reduce our expense and our administrative burden greatly. Included in our 2018 first quarter non-interest income numbers was $1.22 million on gain on sale of a portion of our bonds, which was offset by $1.5 million in technology, termination fees, and other costs related to our Kingwood acquisition. Earnings per share is 56 cents per share compared to 51 cents for the prior year. We ended the quarter at $7.95 billion in assets, up $378 from a year ago. Similarly, our loans have increased $256 million to $4.0 billion, and deposits increased to $6.35 billion, $159 million increase over the prior year. This concludes my review of 2018 and the first quarter of 2019, and I'll turn it over to Kirk Thaxton, who will discuss the trust company. Thank you.
Good morning. First Financial Trust enjoyed a very successful year in 2018, producing outstanding growth in both assets and earnings. Our total assets increased $428 million to finish the year with a book value of $4.29 billion, an increase of 11.1%. The market value of our assets under management finished the year at $5.60 billion, an increase of $470 million or 9.1%. Over the last 6 years, the book and market value of our assets under management have doubled. The trust company also experienced excellent earnings growth in 2018. Trust fee revenue increased $4.49 million or 19%, from $23.69 million in 2017 to $28.18 million in 2018. Our earnings growth was positively impacted by our oil and gas division, which generated revenue for 2018 of $4.82 million, a 50% increase over 2017. The increase was due primarily to additional mineral assets under management and increased production. As you can see from the slide, our oil and gas revenue has been volatile over the last several years. However, it remains an important line of business for us, representing approximately 17% of our total revenue. Our after-tax net income contribution to First Financial Bankshares increased $4.95 million or 57.7%, from $8.58 million in 2017 to $13.53 million in 2018. Although we were benefited greatly by a lower tax rate in 2018, our net income was up 29.6%, assuming a comparable tax rate to 2017. All of our offices experienced double-digit net income growth in 2018, led by our San Angelo office, which generated net income of $2.17 million, an increase of 87.4%. Net income for our Odessa office was up 59.3% and 54.1% in our Sweetwater office. The equity markets had a roller coaster year in 2018, with the S&P 500 up 10.55% through September 30th. However, the last quarter was another story. From September 30th through Christmas Eve, the S&P 500 experienced a sharp correction, dropping 18.93%, finishing the year down 4.4%. Our best performing portfolio for the year was our equity income portfolio, which finished the year down only 1.79%. Fortunately, the markets rebounded nicely in the first quarter. Quarter to date, our equity income portfolio is up 11.61%, our core diversified portfolio is up 12.77%, and our strategic growth portfolio is up 16.90%. All of our portfolios have impressive long-term results. Our core diversified portfolio has a 10-year average return of 12.12%, while our equity income portfolio continues to lead the way with a 10-year annualized return of 12.66%, which is 178 basis points per year higher than the Lipper Equity Income benchmark. Our portfolio managers, led by Chris Montoya, currently manage almost $2 billion in equity assets, utilizing 5 different equity styles, which allow us to provide the appropriate equity strategy to meet each customer's needs and risk tolerance. Bill Rowe continues to do an excellent job of managing our bond portfolios and currently manages approximately $1.2 billion in fixed income assets. Given the interest rate volatility that we experienced in 2018, Bill produced outstanding returns and continues to produce long-term results that outperform the benchmarks for taxable and tax-free portfolios. 2018 was another exciting year for our growth and expansion. In November, we hired Brent Miller and opened our 8th trust office located in Houston. When the holding company completed the acquisition of the bank in Kingwood, we realized the great growth opportunities that were presented to us in that market. Given Brent's experience, we are confident that he will be able to grow this new market for us. In a few short months, we already have over $20 million in assets under management. Brent, please stand to be recognized. We're also pleased to announce that we added to our board leadership in 2018 with the election of Mark Rich. Mark is from Fort Worth and is currently the Director of Investments for the Kimball Art Foundation. Mark will be a valuable addition to our board and will also be serving on our investment committee. We are pleased to announce that the first quarter of 2019 has produced outstanding results for our asset growth. The book value of our assets under management has increased over $186 million since year-end to reach $4.48 billion, and the market value of our assets under management surpassed the $6 billion milestone at $6.06 billion, an increase of $457 million since year-end. This first quarter growth has us excited about the opportunities that lie before us in 2019. The foundation of our business has always been based upon relationships. We are fortunate to have worked with many families for generations. Whether it's our experience in investments, mineral management, property management, or trust and estate administration, our highly talented and experienced team remains dedicated on providing unparalleled customer service to you and your families for generations to come. Thanks to each and every customer of First Financial Trust for allowing us to serve your trust and investment needs. For those of you who are not yet our trust customers, we look forward to the opportunity. Thank you for your attention this morning, and I return the podium to Scott.
Well, thank you, Kirk and Bruce, for those great reports. I hope we can have these kind of reports every year. What I wanted to do was bring up the slide. This is the part that I talk about where we've been and kind of where we're going with the company. It's we call it the State of the Company Address, and I get to have the clicker on this one, so I get to be in control. I wanted to bring this slide back up because I think it's really important to see where we've come from. And some points I want to make about this, that over the last 5 years, we have increased earnings from $78.9 million to $150.6 million, an increase of $71.7 million. Since we went public in 1973, we have increased earnings from $1 million in 1973 to $150 million over those 45 years. If you owned 100 shares in 1973, and there's many of you out there that owned shares in 1973, or your families did, we have increased earnings. Today, you would have that 100 shares today would be 17,188 shares because of stock splits through those years. Those shares in 1973 would have been worth $4,900, and at the end of 2018, those shares would have been worth $991,576, which is a 12.52% increase annually over those 45 years without dividends. That is totally on stock price. So you can see that it's been a good return. Kirk talked about that we've banked generations after generations, and that's one of the great things about this company is we have so many people here that are in the third or fourth generation of not only owning our stock, but also of being customers of the bank and the trust company. And that's something we really pride ourselves on. And so we appreciate the fact that, one, you continue to own our stock, and two, you continue to do business with us. And that means a lot to us. The analysts and investors asked, how are you going to continue to increase earnings over the coming years? And this is a great concern for them because when you're one of the top performing banks in the country, they go, how can you do better? Well, there's a lot of things we can do better. And I want to point some of those things out to you. One, we have to improve our interest rate margin. Bruce talked about the interest rate margin, and although the Federal Reserve has raised interest rates 25 basis points 4 times last year, our net interest margin moved down slightly to 3.96% from 4.01% in 2017. As we make and renew loans, we're working diligently to increase loan rates to reflect the increases in interest rates that the Federal Reserve has made to date. We're also trying to make more floating rate loans so that they can reflect rate increases as they happen. As Bruce said, competition is our largest impediment because it is very competitive in the loan market today. The next thing is to grow loans and deposits. When we take out Kingwood, loans only grew 4.3% last year, and deposits declined 1.54%. We're certainly striving to have more loan and deposit growth this year. We're especially working on our treasury management, retail, and lending teams to work together to grow loans and deposits. Then we look at mortgage and trust. These are two areas that we certainly can continue to grow. Mortgage income grew slightly by $48,000 from $15 million to $15.157 million this past year. We have a very strong mortgage markets, and we need to continue to hire additional mortgage lenders and take on additional business and encourage our lower level producing officers to make more loans. As you heard from Kirk, our trust company is doing very well and is a strong contributor to our net income. Trust income grew substantially last year, as you just saw. But we've got to continue that growth to continue to increase the income. And of course, first quarter, they were well on their way. So if we can continue to do that, we will continue to see trust being a very large contributor to our bottom line. Increasing our fee income. We continue to be well under our peer group in this area and need to properly fee accounts as we open those new accounts and properly price existing accounts. We cannot provide the technology that we provide today to our customers and not charge for it. The technology we have today is extremely expensive, where we can put your banking in your pocket. This becomes your branch. But that is not cheap technology, and too many times we're giving it away. And so we've got to charge for it. It's like what I tell our guys: you don't walk into the cleaners and walk out and say, I'm only going to pay you for the naphtha to clean my clothes. You know, there's a whole process there that has to be feed for, and that's the same thing in the banking industry. So we plan to do a better job there. And we have year by year, but there's still more room. Control expenses. Our efficiency ratio moved up slightly to 49.72% last year. However, we do feel like we can continue to do a better job in cutting expenses and be more efficient and move the efficiency ratio down, which of course improves income. And the next one would be to continue to improve credit quality. Now, I will say our credit quality today is probably the best it's been in years. But that doesn't mean that we can't improve on it and continue to do a better job. And of course, we don't want it to go the other direction. Unfortunately, in the banking industry, you never know what's going to happen tomorrow. We tell the story about we got a $5 million problem loan off the books one day, and we were all high-fiving and getting ready to get the champagne out, and within an hour, we had another $5 million new problem loan. So it's constant. You just never get away from it. I remember as a young lender, I thought, well, one of these days, I'm going to get these problem loans collected. I'm not going to have any problem loans. Well, that never happened, because it's just the consistent process of, if you make loans, you're going to have some problem loans. And of course, the last thing is to improve earnings is make another acquisition. And that always helps. And we are diligently looking for banks that will fit us and bring value to this company. And so we hope to see some of those things happen in the near future. Speaking of good acquisitions, I want to talk a little bit about the acquisition we made when we bought Commercial State Bank, Kingwood. That was done January 1st, 2018. They brought 4 branches to us in Kingwood, El Campo, Fulshire, and Palacios. About a $390 million bank. We paid $59.4 million purchase price with our stock, which was a 13.78% the last 12 times the last 12 months in earnings. We allowed commercial bank shares to pay out a special dividend of $22.3 million prior to closing the transaction. And I will tell you, it's been a great transaction for us, and I hope it's been as good for them. We have an excellent board there. We have an excellent lending team. And what's good about it is they had great performance last year. In the first year, they produced a net income of $6 million, which was an ROA of 1.63%, which is outstanding for a new bank to our company. So we really appreciate our Kingwood group that's here today. Thank you. Okay, I want to go through our regions to give you some feel for, and I'm going to start with the original ones. We have combined some regions, and that's worked out well for us. Unfortunately, as we grow, we can't go to 14, 15, 16 board meetings a month. So in regions that we've been able to combine those boards, that's worked very well. And so what I'd like to do is go through that. Here's the Abilene region with 23 locations, and this includes Sweetwater and Eastland, who have been combined. Here's the Hereford region. Mike still just has one location up there, but it's a busy location, and Hereford has been a very important part of our company for, oh gosh, almost 40 years, if not more. Then San Angelo region with 2 locations. Cleburne region with 6 locations. Stephenville Mineral Wells region with 7 locations. Weatherford region with 6 locations. Southlake region with 7 locations. And then you see us start moving to Southeast Texas, and here's Southeast Texas region with 6 locations. And then around Houston, north of Houston, the Conroe region, along with Huntsville, which has 10 locations. Then we have our Fort Worth branch with 1 location, and our latest acquisition, Kingwood, with 4 locations. And here's the total of 73 locations. And what I like about this footprint is the diversification of it. This is one of the qualities of our company, is that we go from the border of New Mexico to the border of Louisiana to the coast. And we are circling Dallas-Fort Worth and starting to circle Houston. Now, that strategy has been very good to us, to be in towns outside of the big city and not in the big city where we're fighting the big boys. It's done well because we know who we are, and we're community bankers. And we love the communities that we're in. And so that works very well for us. We're not big city bankers. And so being in the communities that we are and having that diversification of Hereford being the capital of the cattle feeding industry, and you see the in Southeast Texas, where all our petroleum is produced into product, very different across the board. And what I like is that strip down I-20, where you get a lot of things happening off of that, a lot of industry coming, and again, around Fort Worth and Dallas and around Houston has been very good strategy for us. Now, to show you, this is one of our new locations. This is New Waverly, which is just south of Huntsville. We started in New Waverly in 2014 in a retail center. We did not have a drive-in. We did not have an ATM. We were asked by the city fathers in New Waverly to come because they only had one other bank and they didn't like the bank. So New Waverly has done very well in this retail location, started making money, but New Waverly deserved a new building. So we built a similar building to what you see in Albany and Cisco, and they are very excited about this new building, and it has an ATM and has a motor bank. So they've got full services today, and they're doing very well. The next location that we finished this year was in Spring, which is just north of Houston. This is probably one of the best locations that we have in the whole footprint because it is located on Riley Fussell Road at Grand Parkway in Burnham Woods, a very busy spot in North Houston. And this happens to be our 73rd branch. This is what makes 73. This opened in January, and we're very pleased with what's going on in Spring, Texas today. And then the last building that we built is Orange. And we had an older 1950s building in Orange that we were able to sell to the city, which was a good deal for the city. They needed the space, and we needed a new banking building because, as I said, to get our Orange building up to speed, it would be like putting lipstick on a pig. So Stephen spent many months in designing this building, and I will tell you it's probably one of our best designed and most beautiful buildings that we've got in the whole footprint. I couldn't be more pleased with how it is laid out and how it looks on the lot, and what it has said to the community of Orange is we're here, and we're here in a big way. And Stephen has done very well with that branch since we opened it just a few months ago, or last month. All right, let's talk about management changes. In March 2018, Will Christofferson was named Vice President of Advertising and Marketing. He is an Abilene native, ACU graduate, with more than 9 years in banking experience as a commercial sales and marketing officer. He will replace Michelle Stevens, our Executive Vice President of Advertising and Marketing, as she retires next month. Michelle has been with the company for 22 years and has been the driving force behind the marketing initiatives during all that time. Then in March 2018, Joseph Crouch, President and CEO, Sweetwater Division, who replaced Kirby Andrews. Joseph has more than 13 years of banking experience and has been president of several farm credit financial institutions. In April 2018, Austin Elsner, there we go, get Austin up there, Austin is a Cleburne native, has more than 18 years of banking experience as a business relationship manager, assistant branch manager, and business banking area manager. He replaces Tom O'Neill upon Tom's retirement after he had worked for the bank more than 20 years. And then in August 2018, Kirby Kaysen, president of the Huntsville market. Kirby is a native of Huntsville, graduate of Sam Houston State, and has been in the banking industry 13 years. He replaced Robert Pate, who retired from the bank after 34 years of service and being president of our Huntsville location for 7 years. And then Andrea Smitty Slagle, Executive Vice President, Treasury Management. Andrea, let me get you up here. There you are. Andrea has been in the banking business more than 30 years and is an accredited automatic clearinghouse professional and a certified treasury professional. And she has brought a lot of expertise to her treasury management area. And then December 2018, John Ruzicka, Executive Vice President and Chief Information Officer and Chairman, President, and CEO of First Technology, Inc. John has more than 21 years of experience in the banking technology business and is running our technology area. We're very pleased to have his professionalism in managing that area. Then in December 2018, Justin Hooper became Chairman, President, and CEO of the Weatherford region to replace Jay Gibbs upon his retirement. Justin has been with our bank for almost 18 years and has been president of the Weatherford region for the past year. Jay Gibbs, who retired at the end of the year, has been with the bank 16 years and has led that region as chairman and CEO and president for the past 6 years. Then in March 2019, Shelley Dacus was promoted to president of the Kingwood region. She is a strong commercial lender who has been in the banking industry for 15 years and with Commercial State Bank for 7 years. Then in April 2019, Marcus Morris was promoted to chairman, president, and CEO of our Fort Worth region, who replaced Martin Noto. Marcus has been with the bank for 8 years and most recently has been branch manager and loan officer at our Keller branch. And of course, in December 2018, Jude Weidman, assistant to me, retired after a 35-year tenure with the company, but still continues to work for us, and she's here today. And we want to thank June. I told June she's had 2 retirement parties and she's not getting another one. So, but we still need her around, and so she comes on special projects for us. But I want to thank all our retirees for their long and dedicated service, and that being June, Michelle, Tom O'Neill, Robert Pate, and Jay Gibbs, and they certainly deserve their retirements. As you noticed, we elected 2 new directors, and I wanted to visit about them for a few minutes, just to give you some insight. Mike Denny, president of Bacher and Associates, Inc., mechanical contractors. Mike is an Abilene native and graduated from the University of Texas with a bachelor's degree in business administration. After returning to Abilene 42 years ago, he was employed by Bacher and Associates and moved up to become owner and president. Under his leadership, Bacher grew to be the largest mechanical company in this area of Texas. He has served on the First Financial Bank Abilene Region Board for 14 years and has served on the Abilene Board's Loan Committee. Little unknown story about Mike is that when he came back to Abilene, the bank offered him a job in the credit department. And Arch Bacher also offered him a job, so he ended up taking the job that Arch Bacher offered him, and Ken Murphy called me to take the job that Mike turned down. So I think, Mike, I have to say thank you for my job. Then Bob Nichols. Bob, let's see, where are you? Right there. There's Bob. Bob is the founder and executive chairman of a Legacy Group, LLC. Bob is a graduate of Oklahoma State University. over the past 28 years, has worked and owned numerous manufacturing and engineering companies. He founded Legacy Group, LLC in 2013. Within 5 years, grew the company to be the second largest gas compressor packager in the world. In 2010, he joined the Commercial State Bank Kingwood Board of Directors and has continued as a Kingwood Regional Director following our purchase of Commercial State Bank last year. And Bob, we appreciate having you on the board. All right, let's talk about total return. Total return of your investment for the last 5 years. It's been a compounded return of 13.09%. We're very pleased with that. As you can see, year in, year out, we don't control the stock market, and I always say I really don't worry about stock price. People will call me and go, "What's happening to your stock?" Well, I don't know. I haven't looked at it. You know, that's kind of how I am. I don't worry about stock price. I worry about earnings, because ultimately earnings will take the stock price wherever it's going. So if our earnings are going up, stock price is going to go up. Sooner or later, no matter what the market is doing, it will correct. And so I just don't worry about it. But you can see we've had some fluctuation in there. Okay, let's look at the performance of our stock to the Dow Jones, the NASDAQ, S&P 500. And there we are in the red. You can see we have continually outbeat those other indices. As you know, a couple of weeks ago, we went from the S&P Small Cap Index to the S&P Mid Cap Index, which created a great deal of volume and fluctuation in the stock price. Unfortunately, at that time, stocks went down as a whole, and our stock price went down, and that's the day I got lots of calls. And thank goodness for the Reporter News. They are so good about, I called them and said, I really need you to do a story because I need our stockholders to understand what's going on. Because when that announcement is made, every firm that has a small cap in the S&P had to sell their stock, and every firm that has a mid cap had to buy it. So in over a week, we had a lot of stock trading. One day we had 12 billion shares trade. I'm sorry, 12 million shares trade. Wish there were a billion. Maybe one of these days. We like the billions. So anyway, that's what's created the fluctuation. But the stock is moving back up since then, and we're very pleased with what it's doing. Okay, let's talk about dividends per share. You can see we have continued to increase dividends. Over the last 5 years, we've increased dividends 27 cents per share, which is a 49% increase. And since we've increased it 49 cents over the last 5 years, we decided we wouldn't do an increase this year. So now that I have your attention, all right, because of our good earnings and our strong capital position, the First Financial Board of Directors has approved a 2-for-1 stock split. Now, this will be effective for shareholders of record as of May 15th, 2019. So you have a little time if you want to go buy some stock. And the distribution date will be June 3rd, 2019. Along with that, they're giving you a double dip this time. They're increasing the cash dividend to 12 cents per quarter, and when you double the stock, that's a 14.3% increase in your dividend. And that's for shareholders of record as of June 17th, 2019. and the dividend will be payable July 1st, 2019. So how often do you get a 14.3% increase? Not very often, and I hope you're very pleased with that. You know, this meeting, the reason for this meeting is to make sure that you understand where the company is going and where we've been and what makes up this company. And we want you to leave this meeting feeling very much informed and very much a part of the company, because you are a very important part of the company. Our retail stockholders are extremely important to this company, along with our institutional, which are our larger stockholders, but you are the basis. You're the ones that are here day in, day out. You're the ones that your families have owned this stock from generation to generation, and we appreciate that so much. Does anybody have any questions at this time? Okay, if you don't, we will adjourn this meeting. We will reconvene for lunch. You'll just go right down the hall into the exhibit hall. We have people in the foyer to point you to the proper direction. As soon as you walk into the exhibit hall, there are food lines. And just go right through the food line. For those of you that don't feel comfortable in handling a plate, just go find a seat. We have people to serve you. They'll go get your food for you and make sure you're taken care of. And we hope you enjoy both the food and fellowship. I never have to worry about this group having fellowship at these meetings. And we appreciate your attendance at this meeting, and I hope it has been educational for you. We are adjourned.